that other stuff out. But I'm going to switch to the disclaimer real quick. Be careful climbing down a chimney because it can cause all kinds of problems. As you know, we've got opinions. We're going to talk about the S&P 500 today, the S&P 600, NASDAQ, and some different fixed income indices as well. We're going to dive into the golden goose of capitalism, and then also share a couple other personal thoughts with you guys as we march into the Christmas season. So anyway, thanks a lot for joining today. I'm really glad that you guys are here. Keith is out on assignment. And you could call us next week, or you could check in with Keith then. But Keith is out on assignment today, and we are here with you. Libby's in the office, Phil's in the office, Amanda's in the office today, and we are all enjoying some Bob's Belgium hot chocolate. And so if you're in need of a warm drink, this is a good one. So just stop by, and you can get your Belgian hot chocolate. But today, I thought we'd just dive right into the markets. I'll go ahead and share my screen with you. It's been a really great last several weeks in the marketplace. And so let's highlight and take a look at a few different indices. This is the Dow Jones. The Dow Jones Industrial Index is the one that you will hear on every nightly news program on the radio. However you receive your news, they're going to give a quote of the Dow Jones. And as you can see, the Dow Jones has just been on a what we would call a lockout rally since the end of October, the beginning of November. The Dow Jones started to really pick up, and this is just 30 stocks. This is 30 stocks hand-picked that represent what's going on in the global economy. And I say global, even though these stocks are US based. They're global because they have operations all over the world. Think of it like this. If Coca-Cola is a US based company, they're selling cans and bottles of Coke all over the world. And so it's a global based company. That's what I mean when I say global. So we've had just a really nice price increase since around early November. And much of that was brought on by this spike in volume. And if you've listened to this show, you'll know that volume is simply who's trading the stock. You know, are we having more buyers than sellers? Is it at an increased pace? And so anytime we see the buyers, these vertical lines, blue lines, coming in above this red horizontal line, that's kind of hard to see. That tells us that there's an increase in buyers, increase in activity. And when you tie volume, a spike in volume like these few days with price increase, that's just a magical recipe. That's just great to see. Conversely, you know, we've seen it. You guys have seen it where it's been the opposite. We've had increased sellers and decreased prices. Decreased prices that are going below the 200-day moving average. That's normally a time to be a little more cautious. But right now, hey, I'm thankful, aren't you? It's been great to see the market start to pick up. And it's been encouraging on really all the different indices. And so let's take a look at the S&P 500. We're going to step into a little bit more broad index right now. This is 500 stocks. And what I want to highlight is something interesting. This, if you look right here, you see where I drew my arrow. It says 48.18. That was the high of the market, and that would have been around the beginning of 2022. And so since that time, the market has just been struggling. We are just now back to those prices that we were at the beginning of 2022. And so if you're looking at your investment statements, you're like, man, this has been tough. It's been tough because mainly 2022 was very difficult. 2023, the S&P 500 has been fighting back, and that's been good to see. And it's been fighting back with positive volume. You can see that reflected on the lower right-hand side of my chart. Let's go ahead and keep stepping out. So this is the NASDAQ. And the Nasdaq is my favorite index to look at. I like it because it's an index of innovation. Several companies, thousands, 3,500 or so companies are in the Nasdaq, and the Nasdaq is going to reflect several different types of technology stocks, growth-oriented stocks. These are the stocks that aren't necessarily invested in or interested in dividends. They're going to plow their profits back into research and development. These could be leading healthcare companies, biotech companies, financial technology companies. These are growth-oriented businesses. And as you can see, much like we looked at with the S&P 500, hit a high. This would have been Black Friday 2021. The NASDAQ peaked out just before about a month before the S&P 500 did. And as you can see, we are just under the highs. And so even though we've had a great run on the NASDAQ, it's still trading below its highs of 2021. A lot of buying volume coming in, which has been good. And so we're paying attention to this index as it's been a leader. Technology stocks have really been leading. And how about the small companies? And again, as you know, these are not really small companies. They have jets, but these are the smaller companies in market cap size. Market cap size is discovered by a multiplication factor of how many shares are outstanding times the current price. And so these companies are a little smaller, and they're the ones who've really rallied back the most recent. And look at that charge. My goodness. Started to rally back in mid-November, as you can see right here, and then just took off. And so that's been good to see. Like the other indexes, it's still trading under where its highs were. The smaller companies like this S&P 600 or the Russell 2000, you can see they peaked out in November of 2021. And so if you bought on that day, November 12th, 2021, you haven't seen a high yet. Looks a little better than it did a couple months ago, though, and we're thankful for that. Now, here's what I want to talk about that is just fascinating to me in the marketplace, and something that I'm looking forward to seeing in 2024 is what is going on with the bond market. We don't talk about bonds too often with you guys. They just haven't been that interesting, and they could start to get a little more interesting. Why? Because we might be done raising rates. Who knows? But as interest rates go up, bond prices go down. It's an inverse relationship. As interest rates go down, bond prices go up. And so I want to highlight a couple things with you. This is the 13-week Treasury bill index, and this is kind of the chart doesn't really tell you the whole story, but if you look up here, I'll draw an arrow. You see that price? You might have to squint, guys. I'll read it to you. It's 52. Okay, and what that's telling you is that a 13-week Treasury bill is paying 5.2%. 5.2% interest. Man, like that's been unbelievable because a couple years ago it was paying diddly squat. And so to pick up 5.2% interest has been really good. Now, if we zoom out and we say, okay, what if we tied up money a little longer. If we zoom out to a 5-year, do you see what it's paying? Isn't this interesting? It's paying 3.85. See this downtrend right here? This downtrend in rates? I mean, it was once 5%, close to it anyway. It was close to the 13-week. But the longer you go out right now, the lower your yield is. Isn't that interesting? And that's just happened here recently. As we've seen the stock market go up, we've seen the bond market yields give up some steam. This is a 10-year, 3.87, about the same picture as the 5-year. And then if we could go out 30 years, which would be kind of ridiculous, 4%. But you see this trend going down. And if you were to be paying attention to your local bank and the CDs they're offering, what trend you'll notice right now is the nearer term maturities, something that might be maturing in the next 6 months to maybe 13, 15 months. Those CD yields are still holding up pretty good. But if you were to go out and say, hey, what does a 3-year or a 5-year look like? You'll notice that the yield drops off significantly. Isn't that interesting? And so what is that telling us? That's telling us that the marketplace is saying, hey, we think rates could go down. Who knows, guys? Who knows? But that's what the banks are telling us right now. That's what the yields are telling us. And so I think this makes for a compelling story going into 2024 to just reconsider your quote unquote safe assets. Nothing's safe. Bonds are not safe. Bondholders were shown they're not safe in 2022. And so if you had a bond fund, it just did not do well. It kind of performed like a stock fund in 2022, just didn't do well. And so I think it's going to be really interesting to see what happens in 2024 with the bond market. And there might be some opportunities there. Last thing we'll look at, and we look at this from time to time, is just the volatility index. This tells us, what is going on in the marketplace. Are people anxious? And when we get above a 28 or a 30 level, that's a sign that markets are a little anxious, and we've we've spent plenty of time there. But right now, the volatility index is trading pretty low. It's under 14, and so that's been encouraging for equity investors. Looks like Keith is on here. See that picture of Keith? I don't know. Well, or that could be Libby just monitoring things to make sure I'm doing what I'm supposed to be doing. But anyway, Keith and I were chatting this morning back and forth, and one of the things that we were talking about was just Santa's sleigh. And Santa's sleigh, think of it this way. Santa's sleigh is what you want to own. Throughout time, Santa's sleigh has delivered oranges and shoes and stuff like that. And this year, it's probably an iPhone, or who knows what it is. It might be some type of gaming system. Point is the inventory inside Santa's sleigh has it's picked up in cost. And so the inventory is not the deal, though, because things change, seasons change, and through that, what has stayed consistent? What stayed consistent is Santa's sleigh. It's like having a well, it's capitalism. It's like having a great business. That business might have some lean years, it might have some profitable years, but it's still the thing that keeps it going. And so think back for yourself. What has been Santa's sleigh in your life? Was it your job? Did you have a company, or do you have a company right now? Do you have a investment portfolio? What is it that just keeps making returns for you, that keeps showing up every year, regardless of the inventory inside of it? And the best Santa's sleigh, the best version of Santa's sleigh is you. And you think about your own life and in your health. That could be your financial health that allows your family to do some things that you want to accomplish and you want to do to live your best life. It could be your spiritual health, your peace of mind that allows you to sleep at night or gives you hope for the future. It could be your physical health. That might be something that you've been working on this year that is allowing you to achieve things that are bigger than you could have imagined, or that allow you to continue your legacy. It could be your social health, and this is one that I think a lot of guys in particular ignore, is your social health, is having some friends or being a friend. And that's one of the signs of wealth. It's a great sign of wealth if you can have friends or be a friend. And so Santa's sleigh is the deal. It's like it's a really great picture of what matters most, because that's transcended time, right? It's the thing that keeps delivering the gifts. um, so anyway, be curious if any of you guys have some feedback on what is Santa's sleigh in your life. Maybe if you send me an email with that, what is the Santa's sleigh in your life? It'll be good for a free Bob's Belgium hot chocolate mix. Yeah, yeah. First 25 guests. No, I don't know. Um, Last thing I wanted to share with you guys today is just my gratefulness to you. I'm having so much fun doing business and life with you, and this is a present that I received last year. My wife knows that I'm a big fan of John Wooden, and you guys have probably heard me talk about the Pyramid of Success table with you guys. And there are some things that are just foundational, and some of these things are friendship, like we talked about, loyalty, enthusiasm. And you move up the pyramid here, and you're stepping into things like initiative and skill set, poise, competitive greatness. But at the top, Wooden has faith and patience. And so here we go. This is the time, a season where you're getting together with your family, and this may require some patience. It might require some faith. And I just want to encourage you that this is a great season to capture that. And so, um, from all of us at Gimbal Financial, thank you for just everything. It is inspiring to be doing life with you. And if there's anything that we can do for you between now and the new year, just give us a holler. We are available. And if there's something you're looking forward to into 2024 that you want to start dreaming about, or maybe that you want to take out of the sleigh and put it to work, we'd love to hear from you on that too. So Merry Christmas, guys, and we'll look forward to seeing you next week. Bye bye.